Good morning. Welcome to this week's market update. The major equity indices all finished up after a wild week for Wall Street. The S&P 500 added 5.7% for its best week since November 2023. The Nasdaq had its best week since November of 2022, adding 7.3%. The Dow also managed to add 5%. After another rough start to the week for markets, President Trump announced on Wednesday that there would be a 90-day pause on many of his reciprocal tariffs. Equity markets responded immediately, with Wednesday's jumping the third largest single-day gain for the S&P 500 since World War II. Despite last week's gains, all three indices firmly remain negative on the year. We believe that the path forward still appears bumpy. China was not part of Trump's 90-day pause, and the current tariff rate sits at 145%. There's also still a 25% tariff on many goods for Canada and Mexico, as well as a 10% universal levy in place. In the bond markets, major selling caused Treasury yields to spike, with the U.S. 10-year note jumping 0.5% on the week, one of the largest weekly increases on record. We expect overall market volatility to persist as both positive and negative news trickles in. Earnings season kicked off on a good note Friday as multiple major banks reported beats on earnings per share and revenue. On deck this week are a litany of large companies set to report, including Goldman Sachs, Johnson & Johnson, United Airlines, Charles Schwab, and Netflix. While we expect mostly positive Q1 earnings results, it is anticipated that many companies will slash forward guidance in light of current economic uncertainty. Inflation figures for March came in better than expected for both consumers and producers. The March CPI annual rate fell to 2.4% and showed a 0.1% dip in prices for the month. The PPI report showed wholesale prices dropped 0.4% for the month. With tariffs expected to put upward pressure on prices, we expect inflation reports in the upcoming months to reveal less favorable data. With the Fed currently in a wait-and-see position, these reports will become even more important as they consider when to reinitiate their rate-cutting schedule. As of now, futures are projecting a roughly 50% chance of the next cut happening in June. Thanks for tuning in. Have a great week.